This is Matthew Cratter from Trader University, and today I want to talk about Terra, Luna, buying billions of dollars worth of Bitcoin. This is a question I've been getting a lot. So we first have to go over some of the names involved. We have Kwon, who's a Stanford graduate, originally, I believe, from South Korea. He's the co-founder of a company called Terraform Labs, which is a Singapore-based corporation. They're listed as a tech or software company. They run the website Terra.money. And this is basically like an Ethereum killer. The problem, just like Ethereum, with having something like Terraform Labs is it's a highly centralized project. And so you can get sued by the SEC. It's very easy to do that. So that's what Terra is and Terraform Labs. The Luna Foundation Guard, which I'm going to call LFG, is a nonprofit organization also based in Singapore, also basically controlled by Kwon. So he's both the CEO of LFG and the CEO and co-founder of Terraform Labs. Now, Terraform Labs runs the Terra blockchain, which is, as I said, sort of an Ethereum killer. It runs on proof of stake, so I already don't really like that. But this is what the blockchain's called. It's called Terra. And then the native token that trades on that blockchain and is the main native asset of the blockchain is called Luna, Luna. This is a governance token that has voting rights, and it's also used to help create stablecoins, algorithmic stablecoins, as we'll talk about. But before we even get to that, it's really important when we look at projects like this to always ask the obvious questions. And so if I had Kwon here, I would ask him, how big was the pre-mine for Luna? How much Luna or how many Luna did you award yourself and your friends? How can a system be decentralized and neutral with a large insider pre-mine plus proof of stake, which they have? Ethereum's moving towards it, but Terra already has it. Terra and Luna already have it. So you have this huge inside oligarchic structure. When you combine a pre-mine with proof of stake, it means that the largest holders of the coins, who got them initially for free or for a very low price, get to wield the most influence on the protocol. And this is very different from proof of work, where having more money does not give you more power as a miner or validator of the protocol. So that's what Terra and Luna are. And then we have a stablecoin, a US dollar stablecoin that trades on Terra called UST. This should not be confused with Tether, which is USDT, but this is Terra US dollar, and it's pegged algorithmically, as we'll see, or actually really through arbitrage, to the US dollar. And then Luna, the native token, is used to maintain this US dollar, UST peg. Now, stablecoins, I should say in general, are quite useful. They've seen quite a bit of growth. It doesn't mean you make money holding stablecoins because they're always pegged to $1, for example. But there has been a lot of demand for it, especially from those who want to hold US dollars outside of the US banking system, simply because the US government, US banking system has been way too stupid and incompetent and tech illiterate to create a good US dollar stablecoin. It's very difficult and not very easy to wire money, to send money quickly, to send US dollars around the world. So eventually, I'm sure we're going to get a very good US dollar stablecoin called a CBDC, which is really just a spy coin and a censorship version of the US dollar. But there has been this market gap, which has been filled by stablecoins like USDC, BUSD, USDT, and now UST. Which is the Terra product. If you're in Turkey or Russia or Venezuela or Zimbabwe, it's obviously you have huge demand for something like a US dollar stablecoin, and they make sense if your local currency is a lot weaker than the US dollar. There are also a lot of people in the US and the EU and in developed countries who are basically what we used to call yield hogs in finance, which are people who enjoy picking up dimes in front of steamrollers, and they're attracted to very high dividend yields or high interest rates, and not really understanding the risk, the technical risk behind stablecoins, and the counterparty risks as well. So you can open up an account, BlockFi, and get a very high US dollar interest rate using their stablecoins there, but there are quite a bit of risk factors involved. People also like USD stablecoins. Traders like it if they want to move US dollars quickly between crypto exchanges when they're doing arbitrage. But all of which is to say, I'm not actually a huge fan personally of stablecoins. I understand why certain people want to hold them, but my problem is there's actually nothing very stable about stablecoins. They have all of these technical risks. There may be counterparty risk. In the case of USDT, there's this long-standing debate about whether it's really backed by US dollars. But whether these coins are backed or not, there is an element of trust involved, especially for the centralized stablecoins. The other problem with stablecoins is they're not stable at all in terms of real purchasing power. They are pegged to sinking fiat currencies like the US dollar, which is losing annual purchasing power at the rate of anywhere from 8 to 25%. If you want to buy a house in the US, your US dollars have been losing purchasing power at the rate of 20% a year. That's how much housing went up last year. If you want to buy gas at the gas station, gas prices have doubled in many parts of the country, in which case your US dollar, your US dollar stablecoin has lost 50% of its purchasing power when it comes to gasoline or petrol. So there's nothing very stable about that, though it is much better than holding something like the Zimbabwe dollar or the Turkish lira. So there are two main kinds of stablecoins. They're the more centralized custodial stablecoins, where you are dependent on a company that backs it, like USDT is, like Tether is. Another example would be the Circle-backed USDC. That's where the C comes from. These are backed or collateralized, hopefully, by US dollars and other short-term US dollar paper. And the peg is managed by the people who run the currency. So there's execution risk here. There's lots of counterparty risk, etc. And then you have what are called algorithmic stablecoins, which tend to be, they're more decentralized, though not completely decentralized, especially if they run on Ethereum. But DAI is a good example of that, where you can use MakerDAO to mint DAI, which are algorithmically pegged to the US dollar. Now, the peg can be broken, but there are various arbitrage things that come into play. So you post something like $150 worth of ETH, and then you can mint $100 worth of DAI or something like that. The last time I looked into it. So UST is much more of an algorithmic stablecoin than it is a centralized or custodial stablecoin. And in this case, UST is pegged to USD using arbitrage. So you can mint 1 UST by burning $1 worth of Luna. You could also redeem 1 UST for $1 worth of Luna. And so in this way, the supply or the market supply of Luna expands and contracts. So you have UST somewhat backed by Luna, which of course fluctuates hugely in value as a speculative token on the Terra network, as the native token on the Terra network. And now we have that nonprofit company that we talked about at the beginning, LFG, Luna Foundation Guard, buying Bitcoin, buying BTC as an alternate backing for their stablecoin, for UST. And so you will be able to, I don't know if you can do this yet, but theoretically, you can sell 1 UST, which is about worth $1, and then get back almost $1 worth of Bitcoin. I think it's 98 cents worth of Bitcoin. So this is why LFG, this nonprofit corporation, is buying it as somehow an implicit backing of the stablecoin. If you're finding this video helpful so far, be sure to hit that subscribe and like button. Maybe share this video with a few friends as well. So I'm not going to go into the exact details of how BTC will be used to quote unquote defend UST. It gets quite complicated, and it still remains to be seen if this will work in a crisis situation. But I'll link to this thread, which does a good job of going into it. So we have Kwon tweeting here that LFG is eventually going to buy about $10 billion worth of BTC, and they're going to use this as something that creates more confidence in UST. Now I'm not a fan of this kind of marketing, P2P electronic cash. This is what Bitcoin is already, and it runs on a much safer network. It runs on the Bitcoin network. You don't have to trust proof of stake, and you don't have to trust Kwon, and there's no pre-mine, etc. And so this is what you might call a Bitcoin affinity scamming. Maybe not quite a scam, but I think this is very disingenuous to say that you need something that Bitcoin is somehow difficult to use. But either way, LFG has been accumulating Bitcoin. You can follow their progress. I will link to this. This is the Bitcoin address. This is a multi-sig address where they're storing their Bitcoin, and they currently have 30,727 Bitcoin. We can see the reserves have been increasing, and a lot of people have attributed Bitcoin's price moving up in the past few weeks to LFG buying. It looks like if you do the translation here, they bought about $1.5 billion worth of Bitcoin so far, and I believe it's being held in a multi-sig address where the different directors at LFG each control a key. Kwon's been saying that Terra is going to become the world's single largest Bitcoin holder in the future, which does create a lot of implicit demand for Bitcoin, going from $1.5 billion worth of Bitcoin to $10 billion worth of Bitcoin and beyond. This may or may not happen, but I think it's very interesting what it tells you about Bitcoin and the coming Bitcoin standard. Kwon told Bloomberg, the reason we're particularly interested in Bitcoin is because we believe that it is the strongest digital reserve asset, which of course begs the question of why you would want to hold Terra, why you'd want to hold Luna or UST or anything else like that. So there are two main ways that people promote their new coins, and Kwon is using one of them. The first version is just to criticize Bitcoin and say, oh, Bitcoin is old tech, it's too slow, it uses too much energy, it boils lakes and kills fish, etc. So that's how you say, that's one way to promote your new cryptocurrency. You just say it's better than Bitcoin. But the second way, and this has become a lot more common recently, is to say my new coin is great because it's like Bitcoin or it has some Bitcoin in it. And this is what you might call Bitcoin affinity scams. And I do think that Terra and Luna do fall under this, and they're using the power of Bitcoin to market their token and their stable coins. But I think it's funny when you think about this, how Bitcoin is always the reference point for these people. And it almost makes you think that Bitcoin might be the most important coin out there, since this is what everyone references. The other thing that people often point out as well, it must just be a coincidence, but it seems like crypto bull markets always kick off exactly after the Bitcoin halving. So you have this strange thing where people want to replace Bitcoin and say their coin's either better or it's just as good as Bitcoin, and yet Bitcoin doesn't really care. Bitcoin remains the center of the financial universe. It's the only thing that ultimately matters, and we wouldn't even be talking about Luna if it weren't for the fact that they were buying Bitcoin. It's very important to realize that their stablecoin, their UST, is not a Bitcoin-backed currency. It's loosely related to it, but UST is pegged to the US dollar. If Bitcoin goes up a lot, UST is not going to go up a lot. The point is it's pegged to the US dollar, and it should always have a value equal to roughly one US dollar. And as we've seen over the past decade, and really the history of the US dollar since the Federal Reserve, the US dollar is not a good store of value, and it's not something that holds its value. It's fine to use it as a short-term medium of exchange. But I think there are more problems with Terra and with Luna. First of all, why in the world would I want to own anything that lives on a proof-of-stake, hugely pre-mined project like Terra? This is a problem with owning Luna. There's lots of technical risk. You're at the mercy of the whale, since it's a proof-of-stake system where he or she who has the most coins has the most power over the protocol. So you hear a lot of people saying, hey, I'm buying a crypto that has lots of technical and execution risk, but because it's partially backed by Bitcoin. You actually don't hear people saying that, but that's sort of the truth behind what they're doing. So the answer is, of course, why not just buy Bitcoin? You don't have to let Kwon buy your Bitcoin, and he might ultimately end up running off with it, he and his directors. You just don't know. You can own Bitcoin yourself, and no one can take it from you, and you don't have to rely on a Singapore nonprofit to keep your Bitcoin for you. Again, UST and Luna do not have, they're not pegged to Bitcoin. It's not clear at all. Certainly UST, as we said, will not go up with the price of Bitcoin. It's also important to remember that buying Luna, the token, does not give you any equity ownership in Terraform Labs or in the Luna Foundation or in LFG. It's a token, it's not equity. And so when you participate in this, you're basically making the insiders who own equity in the Luna in Terraform Labs. People like Kwon, you're making them richer, which is fine as long as you know what you're doing. He obviously owns a huge chunk of Terraform Labs, and he owns the equity. He doesn't just own the token, he owns the actual stock, and also presumably has bully pulpit control over the Luna Foundation. Now, it's fine that Do Kwon and his companies are buying Bitcoin, and I think it's hypocritical to tell someone they shouldn't be buying Bitcoin, because the whole point is it's out there, anyone can use it, it's open, it's permissionless, anyone can mine it who wants, anyone can stack it. You don't need a license, you don't need my permission or anyone else's permission, obviously. And so LFG is welcome to buy it. They've been buying a lot of Bitcoin recently, and it's definitely, I think, been showing up in the short-term price action. I should say, though, that I think it's unlikely ultimately that UST and that Terra and Luna will succeed, in which case I think all this Bitcoin is actually going to end up getting dumped back in the market at some point, which is not the end of the world either. There are always going to be big buyers of Bitcoin. There are always going to be big sellers of Bitcoin. Projects come and go, and this is what money is like. The US dollar didn't care that a certain skyscraper in New York that was funded with US dollars made it, or that the project failed. The US dollars just kept circulating around. So it's not the end of the world if LFG has to ultimately dump their Bitcoin in a crisis situation. The real problem is that stablecoins are highly unstable projects or animals, and this is not widely known. I should probably make a full video about this because it can get very complicated, but stablecoins are subject, especially algorithmic stablecoins, are subject to what are called death spirals. And so stablecoins work really well as long as underlying demand for the stablecoin keeps growing. And this is mostly what we've been seeing. This is a market segment that's been growing in a huge way in the last few years. But when that demand for the stablecoin stops and it reverses, then you're really at risk of a death spiral. If there's any reduction in demand for a stablecoin, it has the potential to create a negative feedback loop where confidence in the project falls. Then the underlying token, in this case Luna, would fall, and then confidence would fall in that token's collateral backing and the peg to the US dollar, in this case, for these stable coins. What would happen is investors would then, as they lost faith in the project, they would trade their UST for Luna. They would dump that Luna into the open market, presumably in exchange for Bitcoin or fiat. Price of Luna would plummet versus all the other currencies. In that case, more Luna would need to be minted for UST, for each UST that got burned, and you'd end up with a hyperinflationary situation with Luna. Again, if Luna or UST fails, all that Bitcoin's can get dumped back into the market and liquidated. But that's okay too. There's going to be someone to accept it. I'll be buying it, certainly, because Bitcoin is the best. It's the most neutral, pristine collateral in the world. It can't be minted, and there's a very small, finite supply of Bitcoin. Personally, I don't want very much exposure to USD or any USD stablecoin. I prefer to store my value and my savings in Bitcoin. It's one thing to use a little US dollars to pay your fiat bills, but I don't think it's something that you want to hold, or at least that I want to hold in any large quantities. And again, none of this is investment advice for you, obviously. US dollar is much better than most fiat currencies. It's much better than the Turkish lira. It's much better than the euro or the yen or the Australian dollar or the Canadian dollar, but it really still is a melting ice cube. I like to say that Bitcoin is my stable coin. And the fiat price of Bitcoin can move a lot if you decide to price it in dying fiat. But Bitcoin itself, the asset, is pristine, it's neutral, the network is incredibly stable, it's not always crashing like the Solana network, can't be reversed like the Ethereum DAO hack where Vitalik rolled back history. The Bitcoin network is decentralized, it's neutral, it's incredibly stable and secure, keeps cranking out blocks every 10 minutes on average, and it keeps adjusting through the difficulty adjustment, it keeps adjusting to decreases and increases in the hash rate. The reason Bitcoin's fiat price is so volatile, as we've talked about in previous videos, and why it doesn't look like a stable coin is because Bitcoin is like a swimming pool or a small pond, and then fiat and the existing fiat system is like the ocean. And so you have the ocean coming into the swimming pool. At some point, this Bitcoin swimming pool is going to be as big as the ocean. In the meantime, it is very small, and it really is like the tail being wagged by the dog. As the swimming pool expands, become the size of the ocean, There will continue to be lots of waves and turbulence and volatility, and people will lose sleep at night who don't understand Bitcoin. But Bitcoin will still be Bitcoin. It will remain the same, and Bitcoin will still be around when there's no one who remembers Kwon or Terra or Luna or UST. And even Bitcoin will be around when no one remembers what the US dollar was. That will obviously be quite some time from now. But Bitcoin really is the ultimate stablecoin if you understand these things. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.